Welcome back to What Would It Cost? On our second episode, we talked all things private lending. Now today we're going to take you behind the scenes of that private transaction with a lawyer.
And today we're sitting with our hotshot special guest, Mr. Daniel Panza.
Thanks for having me, guys.
Yeah, no problem. Thank you for coming out. You bought a shed in Windsor?
You made money in the housing market last year? No way.
Anything you shot on, you would have made on.
What would it cost?
That's the $1 million question. You're looking at North Bay now is at $1 million. I don't even think they hand you the keys anymore. What is it going to cost?
How much? Hi, my name's Nicholas Regina.
My name's Michael Sakuro.
And you're listening to
What Would It Cost?
Is that good?
We're excited for this one because we're talking about private lending. It's a big topic, and we want to take people behind the scenes on the legal side because it plays a really big factor. I find more so than your traditional A or B mortgage because there's a lot to do behind the scenes with the lender, with the private lawyer. Whereas you guys are almost like the secondary underwriters or the mortgage officer, so to say, like when I submit to a lender or B lender. So take us through that steps once we submit a file to you.
So yeah, basically when I get a commitment letter from you guys, that's my first introduction into the file. I might get a call from the lender or the borrower, whoever is my client, whoever I'm representing. Normally for deals that I do with you guys, I'm representing lenders, but I've represented borrowers in the past. So they might give me a call saying, hey, heads up, Michael or Nick is going to send you a commitment. This is basically what the terms are. They'll just give me, all they care about is the principal and the interest. They don't care about the other stuff, but that's what they'll tell me. So then I'll get a call or an email from one of you guys. I mostly deal with Michael, Nick. I get calls from you only if things go amazing, or if things go amazing, I'll get a call from Nick, or if things go horribly, I'll get a call from Nick. I mostly deal with Michael. So I get
Nick's call.
That's exactly how it is. Oh man, what I do or no. All right. Okay, so I get the commitment from Michael and I review it. I'll call the lender. I'll call Michael. Make sure everyone's on the same page. And a major thing that I find is we need to have open communication between all parties, because there shouldn't be anything lost in translation when it's you guys are talking to the borrower or the lender. I'm talking to my client. I'm talking to you guys. As you know, Michael, I call Michael maybe 20 times a day. If I'm doing a mortgage with him, 20 times a day. If I'm not, I'll call him 2 times a day.
I just want to interject here. I love the way you communicate. It's above and beyond. You always make sure to be the first one to reach out. It's never that we ever feel like we're chasing you. You're always ringing up Mikey's phone and in our inboxes. So didn't want to hijack the convo there, but I did want to validate that and say we do really love to work with you for many reasons, but that being one of the main ones.
Well, it's good to hear, because as a lawyer, I mean, my assumptions are only as good as what you guys are telling me. My knowledge is only as good as what I'm hearing from you guys, what I'm hearing from my client. So if I'm working off of assumptions of what I think the deal is going to be, that's how things go wrong. So if I'm not calling my client, 100%. If I'm not calling you, if I'm not calling the other lawyer to get exact details of what's going on, then I'm going based off of assumptions and I'm not doing my job because I shouldn't be going based off assumptions. So to get back into the beginning about introduction, the commitment letter, call everybody, make sure everything's good. Then we go into drafting the documents to reflect the agreement between the parties. So we go into drafting the documents. Most of them are standard documents. You can make changes here and there to reflect the reality of the transaction, of what's going on. All transactions are different to a certain degree. And you also have to arrange title insurance, which is, I know this is what would it cost. So that is something that costs the borrower some money. And it's one of the major expenses in a private lending transaction, because these title insurance companies do charge a premium for private mortgages. Okay, so the title insurance fees can be, it depends on the amount, the principal of the mortgage, and you could also get certain endorsements, is what they call it, on that title insurance policy for specific items that you request. Okay, so depending on the title insurance policy, it could range from $500 to $1,500, around there. And that is what lawyers call a disbursement. So when we're charging our client, we charge our legal fees plus disbursements and HST. Okay, so the disbursements include title insurance, if we need to register a mortgage, the government charges us a registration fee. Okay, so that's approximately $77. Okay. There's a transaction levy that the Law Society of Ontario, we have to pay. I believe it's around $65.
Okay.
And then title searches, we got to look at the property to see the parcel abstract of everything that's registered on the property. So we see all the pre-existing mortgages, if there's any liens, if there's any encumbrances, what's going on. We pull the actual instrument of the previous charges and the transfer, so that costs money as well. Okay. So those are the main expenses that you'll be paying for in a private mortgage: title insurance, search fees, registration fees. Okay. If there's anything that needs to be couriered, faxed, copied, those are also fees that incur.
Staples the ink.
Yeah. Some people charge for that. It's basically anything that the law firm is paying out of their pocket on behalf of the client. That is a disbursement. Right. Okay. Right. And then the legal fees are our fees, what we take.
Right. Right. And then run us through, because a common misconception or one main factor when we're bringing on new lenders is explaining to them what their cost is. And a big thing with private lending is that the borrower is paying the cost for the borrower and the lender's lawyer's fees as well.
Yeah.
So just run us through like that overall cost and how that works with the communication of the other lawyer.
Exactly. So the way that it's normally structured is that the borrower will pay the lender's legal fees. So when I draft the documents, I provide the borrower's, and I'm representing the lender, I provide the borrower's lawyer with a direction regarding the funds, which states exactly the amount of money that's coming to my law firm, the amount of money that's going to the lender for the lender fee, the amount of money that's going to the brokerage for the broker fee, if there is one. And then we have a trust ledger, or a draft trust ledger, which basically breaks down, okay, let's say it's a $200,000 mortgage. Okay, the lender sent my law firm $200,000. We retained, let's say, legal fees and disbursements were $2,000. We retained $2,000. The lender's fee is $2,000, and the broker fee is $2,000, let's say. And then it'll show the net advance to them. That's $6,000 in fees. The net advance to them would be $194,000. Right. And they know that that law firm's getting $194,000, and then that lawyer will take their fees and disbursements, and then the borrower will get whatever is remaining from that. Right. Okay. So something that the lenders need to know is basically they're going to be sending my law firm $200,000, right? Right. In that example transaction, $2,000 is going to the broker, $2,000 is going to my firm, and then I'm sending them a check for $2,000 for their lender fee. Right. So in a way, they're sort of fronting the cost of those fees at the beginning. Okay. And then once the principal is paid back, then they get the full $200,000 back. Right. So that's basically how it works.
And so the trust ledger is like a balance sheet.
Exactly.
You're showing on both ends. This is what the costs were, and they both equal to the same total of $200,000.
Exactly. So when you say that the borrower is paying the lender's legal fees, the borrower isn't writing a check to the lender's lawyer. Right. It's coming out of the advance.
Yes.
And then that's how it works.
And then it's being registered on title for that amount, and upon the loan being discharged, the full amount is then paid out, so they'll be reimbursed then, essentially.
Exactly. Right. Yeah. And you're charging the interest, like in that example, $200,000. That's what's being registered on title. Right. You're getting interest on that $200,000. Yeah. And then all the other fees for the broker, the lawyer, and your lender fee gets paid out, and then the borrower gets that net advance.
Right. Where are the checks?
That's a big issue. Like, a lot of people, nowadays nobody has checks anymore. Yeah. That's how people like having post-dated checks as a lender. Yeah. You don't want to be hunting people down for an e-transfer for cash. You got to knock on their door. Who knows what's going to happen? You want those post-dated checks. And the lenders that I've represented have been flexible in that, okay, if you don't have the checks, you're supposed to have the checks on the day of closing. Yeah. Here's a package, here's the checks, and that's that.
Yes.
In certain circumstances, we talk to you guys, we talk to the borrower's lawyer, we figure it out, and we try to make a solution where it's, okay, the guy's opening a bank account, the girl's opening their bank account, they need to figure this out, they need to order them, fine, we'll deal with that. Yeah. But if you miss a payment, that's a different story. So if you got to do an e-transfer because you don't have we try to be accommodating, but it is up to the lender at the end of the day. If they want post-dated checks, you're not giving them post-dated checks. Yeah. And in the mortgage, it says that there has to be post-dated checks.
Yeah. And a lot of lenders love the fact they have that peace of mind where, okay, typical private loan, 1 year term, 12 post-dated checks on this date of the month. I get to go to the bank, make that deposit. The checks are in the envelope, and they're, where we keep all our paperwork in the house, kind of thing. Go to that bank, deposit like that. That very old school mentality of just the money's there, the checks are there, as opposed to having to do that chasing for an e-transfer or let's meet up. It's everyone's so busy, they have so many things going on, where it's just simple 12 checks, interest only, deposit them on that day of the month. And they really account for that, right? So it as much as we laughed about it a little bit, it's something that really sticks out to the lender, and it's one of their favorite things is getting those 12 post-dated checks, right?
Yeah, now they don't even have to go to the bank. They can just take a photo of it in their underwear.
Exactly. Deposit whatever they want.
And there, it's deposited. So
yeah. And especially because you deal a lot with the lenders now. So again, another question from new lenders is what happens if they don't pay, or what are the chances I lose my money? Because again, they're looking at it from the sense that you have your bank products, you have your savings account, your GICs, your mutual funds, your stocks. They all have their own risks, they all have their own rewards, but it's sort of laid out as to what's going to happen. So like a GIC, it's guaranteed. So you lose your interest if you cash it out early on most of them, but it's guaranteed. Mutual fund, it fluctuates based on the market. Stocks, again, they fluctuate based on the market. So now with the private lending, I give you $100,000. What are the chances, or what's the outcome that if I'm going to lose my money on the legal side?
Yeah, sure. So I mean, that's something for where you guys come in and you guys assist the lender in making a determination. Hey, how much risk is the lender taking on?
Right.
Yeah.
What is on title? Is there a pre-existing mortgage? Are you in second place? What is the value of the home?
Yeah.
So that's where you get
fourth mortgage, 150 LTV.
Yeah.
Exactly.
It's in Woodbridge. It's good.
Don't worry, bro. It's gonna come up in value. Give me the money.
Yeah, sure. So that's what. So as a lawyer, my job, I want to make sure that my client's money is secured in a legal sense, but as far as determining their risk tolerance, that's something for them to determine, and I need to provide them with all of the information in my power or that I can obtain in order to help them assess those risks.
Right. Yeah.
So we have you guys have clients who are more risk adverse. You have clients who are willing to take on more risk, clients who don't want to take on as much risk, and you guys are providing them all the information for them to come to their determination. And a lot of these private lenders are sophisticated individuals.
Yes.
They've been in the real estate market for a long time. They've been lending money for a long time. So this isn't something that is for the faint of heart. I mean, your security is in that property. So if you're satisfied that property has sufficient security, has sufficient value to account for that mortgage that you're going to be putting on title, then you should feel confident in that.
Yeah.
But that's a determination that you need to make.
And I know, like, even working on some files and overhearing you and Mikey go back and forth with it, come the underwriting stage and us putting our finger on the pulse and really getting a good understanding for the value of that property, he bounces a lot off of you, and you guys do, go down that rabbit hole together, and you do the due diligence with him, which is you going above and beyond from you doing your job, right? And we also appreciate that, and it's been nice working with you and getting that, education and understanding from your end as well to reassure us, on certain things that even if we're 100% certain, just to have that, that expertise and that, person behind the file that validates that and says, yes, for sure, that's what it is. These are big amounts of money that we're securing against these properties, and we want to make sure we have our lender's best interest along with the borrowers. So it's always nice to have you come into a file and really be able to bounce off of that.
Yeah, for sure. And you know what? It's sad to say. I mean, this is the mentality that I need to have, is that the borrower is trying to, not screw over the lender, but you need to have that mentality that they're not coming with the full truth and honesty. Right. So you need to do your own due diligence. Yeah. I'm not believing anything that guy tells. If that guy says he has a $100,000 mortgage on his property, I'm not believing that until I go check title and see that there's a $100,000 mortgage on that property, and I go and I get the bank a statement from his bank showing that the mortgage is $100,000.
Of course.
Or if he's saying there's only one mortgage on title, I'm not believing that until I go check title and see that, because there might be one mortgage on title, but there also might be a construction lien on title.
Yeah.
There also might be a notice of security interest on title.
Right.
There might be a whole host of other things on title that they're not telling you about.
Yeah.
Right.
So that's a part of my role in helping the lender determine their risk, assess their full risk, is looking into title and discovering these things. And there might be stuff on title that the borrower doesn't even know about.
Right.
And there might be stuff on title that the borrower doesn't know about and that the lender is fine with assuming.
Yeah. Yeah.
So yeah, it's all about providing the lender with the most information possible in order for them to make a determination if this investment or this loan is right for them and their risk tolerance.
Right.
So yeah, so now coming back to, again, we talked about the loan to value. You know, you want to make sure there's that loan to value there. So if the person has to sell the house or collect that repayment, the value's there. Now, what about, let's say they don't pay. So besides the NSF, besides the bounce checks, they're like, I borrowed this $1 million, screw it, I'm not paying. I'm not paying back the lender. What's the next proceedings? Or does that person lose that $1 million, or how's that, like the lender, they're going to lose it, and how's it going to affect the borrower?
Yeah, because a lot of the people that have concerns about that or have that questions around that, they're under the impression that they now own the property, or they're under there's so many different assumptions, right? So if you could just clarify exactly what happens when you start the proceedings of a power of sale, walk us through those steps, and then take us to the finish line on how that looks like.
No problem. So yeah, so let's say somebody owes you have a mortgage, somebody owes you money, they're making interest payments, and they don't pay, or their check bounces.
Yeah.
The first thing we do is contact you guys, because you guys have a direct link to them. You guys call them up, try to work something out with them. If they're still adamant they're not paying, then that's when we have to go to court.
Yeah.
And there's three main options that you have. You can have a power of sale, foreclosure, or judicial sale. Okay. So those are three main ways to do it. And it's always in everyone's best interest to avoid going to court. So that's why we like to call you guys, try to figure it out, call their lawyer to see if we can work out something before we go to court.
Yeah.
But if we do, there's statutes, there's laws that are governing this, that are sort of giving you a step-by-step process, and there's rules that you need to follow in order to do this. So you need to wait for the default to last a certain amount of days.
Right. Okay.
Then you need to give notice after that certain amount of days, and wait until you can sell the property if you want to do a power of sale. Okay. So a power of sale is when you sue the person, and you have to sue the person in court, and basically you're forcing a sale of that property.
Right.
So you go through the whole court process. Finally, at the end of it, you sell the home. The home is sold, and then you can get your money. So it goes. You got to pay if there's previous. Say your second mortgage, the first mortgage gets paid. If you're the first mortgage, you get paid. Your principal and your interest. And also in certain private mortgages, there's additional provisions that we like to include, where if we do have to initiate a lawsuit or proceeding, enforcement steps, there's automatically 3-month interest penalty.
Okay.
On top of, so let's say there is that, they would have to pay the 3-month interest penalty. Okay. They would have to pay the interest that's been accruing and the principal.
And the NSF fees. The
NSF, so fees. NSF fees. Right. So whatever fees, in additional provisions to the mortgage, there's a whole list of fees that you got to pay if there's defaults and stuff like that.
Right.
So that's one aspect of it. Right. And then you can go down the list. If there's a second mortgage, they get paid. And then if there's money left over from the sale, then the actual borrower or the mortgagor will get paid. Will get paid.
It's always in their best interest to sell the property. Because that's what I also explain to the lenders as well, like these first-time lenders, like, there's always that risk that it's not that you're going to lose the money, it's just it might be on hold because you're going through court proceedings or whatnot. But what I see it as on, like a human level, if you want to call it, is that people are going to do whatever they can to keep their house. They'll get rid of their car, get rid of debts, or rack up credit cards, because that's their last resort. It's your home. You don't want to be homeless after. So that's usually what happens, right? Is they're just selling that property, trying to get whatever they can out of it, pay their fees, either go rent or just downsize. Yeah,
and an important point to note is that at any point during that proceeding, if they pay that amount that's outstanding, then the proceeding stops.
Okay.
Right.
So what's that timeline look like? So now I'm the borrower, I don't pay, I'm not being responsive, I'm not really doing anything to be proactive about defending and wanting to hold my home. What does that timeline look like from the legal proceeding standpoint, when the house can then be listed and sold. And when it is sold, people are under the impression that, oh, well, because now I'm in power and hold, the key essentially. I can list it for whatever I'd like to list it for and have someone come back door and purchase it. But that's not the case. It has to be for fair market value. You just go through that motion.
So something to back onto what you're saying is that if you do, the reason why there's a judicial sale, it's basically, it's similar to the power sale where the home is being sold, but that is a court monitored sale.
Right.
So the borrower can't then say that you improperly did something. You didn't sell the property for fair market value.
Right.
You're not going to get, they're not going to go after you for damages for improperly selling the home.
Right.
And they're going to say, hey, you know what? The home's worth $2 million and you only sold it for $1 million because you just wanted to cover your principal, and that's
exactly.
it.
Yes.
So that's why there's the judicial sale where it's done by a court. So how are they going to say that it was improper when it's the court that did it? So that's why they have
so it's protecting the lender again
from damages from the
borrower coming back
and saying it was done improperly. Where you know what, you listed it for sale for $1 million, worth $2 million, and your cousin's company bought the property for $1 million. So you're just helping your cousin out, and you have shares in that company. So you know what, that's why there's that judicial.
Make sure it's fair across the board.
Yeah, exactly.
So now, what's the appetite for them listing now the property, and what that ask has to be, and how do the courts make it so that it's fair and the borrower actually feels like, you know what, I got fair market value for it. We pulled up some comparables, and it actually even did better than that because of the timing of the market and where that was. Walk us through that.
So yes, in a power sale, you're obviously going to hire a real estate agent who's not going to list it for below market value. Right. You're going to try. The point is, and in every court proceeding, you want to act as reasonable as possible. Right. Because there's costs that are involved. It's a whole separate thing. Yeah. There's textbooks that are thicker than Michael's head about this thing, about costs. It's a whole thing because in Ontario.
Because I bust his balls on a daily. He's got to get it in there.
I know. You made it on live TV.
But no, for real, So in Ontario, the general rule is that a loser pays the winner's legal fees, a portion of the winner's legal fees, I should say. Okay. So. And a whole host, like I said, there's a thick textbook on a whole host of factors and considerations that are going into to determine exactly how much that loser is going to pay the winner. Yeah. So a part of that is the conduct of the parties. Yeah. If you're acting unreasonably, and you're a lender, and you're acting unreasonably in the court proceeding, and you end up winning, you might not get as much costs. For your towards your legal fees. Okay. So that's why it's important to note that as a party in any legal proceeding, you should always act as reasonable as possible, because if you're acting unreasonably as a plaintiff, you might get less costs, or you might even get costs awarded against you. And if you're a defendant and you're acting unreasonably, you're not responding, you know what, you're not engaging in the court process. Then increased costs will be awarded against you. Right. So there's a whole host of issues and a whole host of factors that go into costs. And so the whole law, like I said, it's a very complicated thing, but generally the rule is costs follow the cause. So if somebody causes something to a court proceeding to extend over a period of time because of their conduct, then costs are going to be awarded against them or reduced for them.
Right. In light of the podcast being called What Would It Cost, if you don't mind us asking you, what would law school cost for all the young listeners and viewers?
The law school fees are a lot. It's a lot. It's a lot of money. I mean, I don't even know what it costs to go to law school. I know what it costs. I know what it costs.
Bro, that's a perfect answer. And then tag your dad. See, I'm on the sheet with my dad. I'm on the fucking sheet.
He knocks on my door. So law school, it depends. You know where they kill you in the books and all that other stuff is where they kill you. But tuition's probably around $15,000 to $30,000 a year. I haven't really checked recently what it's gone up obviously. But
ask your dad, Dan.
Yeah. Hey, Dad, how much did it cost? But yeah, it's around there per year. And like I said, they kill you on the books, the textbooks. That's
Yeah. Very cool.
Thank you for coming out. We appreciate you having that conversation with us, going deep on the mortgage transaction, what would it cost, and it's great. It's been great working with you.
I love talking to you guys. I love calling you guys. You guys always answer when I call, so I really enjoy. You guys are fun and awesome to work with.
Yeah, and congratulations on getting on the industry at such a young age, and you're doing great. And there's the road ahead. You're going to crush it and do very well with, brother.
Thanks. Appreciate it.
Yeah, absolutely.
All right, thank you again for tuning into this week's episode. Be sure to check us out every Monday on all your favorite streaming platforms, all our social medias. Be sure to like, follow, subscribe, and we'll see you next week.
Next on What Would It Cost?
I have some connections in the city because I went to school and a lot of those people did go and work for the city, so that's also like a nice advantage, right?
Nice.
I need the zoning changed.
For your investors and people that are placing funds in the real estate market and knowing how to navigate them and say, hey, you know, this might be hot right now and where all the sheep are flocking to kind of thing, but this is what's happening on the back end with the city planning.
But I think the biggest thing that first-time buyers need to shift is their mindset about what their first home looks like.